In a move sending tremors through Washington, Canada has made a sharp pivot. It's a strategic realignment that's testing a century-old alliance and raising the specter of a North American economic conflict. During a high-stakes visit to Beijing, Canadian Prime Minister Justin Trudeau stood with Chinese President Xi Jinping to announce a new strategic partnership. Now, this isn't just a routine trade mission. For many in Washington, this feels like a calculated defiance of Canada's closest ally, the United States. And the timing couldn't be worse. It comes just months before the critical 2026 review of the U.S.-Mexico-Canada Agreement, USMCA, the trade pact that forms the bedrock of the entire continental economy. In response, the White House has unleashed a torrent of fury, with President Trump threatening a crippling 100% tariff on all Canadian goods. This isn't a drill. The relationship between two of the world's most intertwined nations is on dangerously thin ice. How did we get here? How did the world's longest undefended border suddenly feel like a geopolitical front line? What's actually in this Canada-China deal that has provoked such an explosive reaction from Washington? And most importantly, is this a disastrous misstep by Canada, or a brilliant, risky strategy to secure its own future in a world dominated by the US-China rivalry? We're going to break down how this happened, what it means, and why this could be the start of a major shift in global alliances. To grasp the scale of this crisis, you have to understand the agreement that lit the fuse. On January 16, 2026, Prime Minister Justin Trudeau's government finalized a preliminary agreement in principle that aims to reset a Canada-China relationship that had been in a deep freeze for years. On paper, it's about resolving trade disputes. But when you dig into the details, you find what Washington sees as a direct challenge to its economic and security interests. The most explosive part is the reversal on Chinese electric vehicles. Back in 2024, Ottawa and Washington moved in lockstep, imposing a massive 100% tariff on Chinese-made EVs to shield the North American auto industry from subsidized competition. It was a show of a united front. Now Canada is tearing a hole in that wall. The new agreement will slash that tariff, allowing an initial quota of 49,000 Chinese EVs into Canada. That number isn't random. It's enough to give Chinese automakers the strategic foothold in North America they have been craving. This move strikes at the very heart of the USMCA, which was designed to protect the continent's auto manufacturing base. While Canadian officials argue it's a small fraction of their market, the symbolism is huge. In return, China gets a vital entry point, a prize it has aggressively pursued. The second part of the deal is about agriculture. For years, Canadian farmers have been hammered by punishing Chinese tariffs, especially on canola seed. This agreement is being celebrated in Ottawa as a massive win. China has agreed to slash its combined tariff rate on canola from a crippling 84–85% down to around 15% by March 1, 2026. This is a game-changer for a market worth billions. The deal also offers protections for other Canadian exports like lobster and crab. For Canadian farmers, it's a desperately needed lifeline. But this win comes with a geopolitical cost. It deepens Canada's economic dependence on Beijing, the very thing Washington has been trying to prevent among its allies. Taken together, these moves represent more than just a trade deal. They signal a fundamental shift. Prime Minister Trudeau's government is framing this as strategic realism, taking the world as it is, not as we wish it to be. This new approach was echoed by Trudeau's predecessor, Mark Carney, who spoke at Davos about a rupture in the world order and the need for middle powers to forge their own path. But in Washington, this so-called realism is being seen in much simpler terms: a stunning betrayal. The reaction from the United States wasn't just fast, it was volcanic. The Canada-China deal landed in D.C. like a declaration of economic warfare, sparking political outrage and a direct personal threat from President Donald Trump. This isn't just about tariffs. It's about trust, security, and the future of the North American alliance. The most immediate backlash came from President Trump himself. After an initially mild comment, his position shifted dramatically. In a series of furious posts on Truth Social, he threatened to slap 100% tariffs on all Canadian goods if the China deal goes through. He accused Prime Minister Trudeau's government of trying to make Canada a drop-off port for China to send goods into the United States. His language was apocalyptic, warning that China will eat Canada alive, completely devour it. This is the nuclear option in a trade dispute. A 100% tariff would effectively freeze the largest bilateral trading relationship on the planet. It would shatter auto industry supply chains, devastate Canadian exporters, and send prices soaring for American consumers. The threat alone has created one of the deepest divides in U.S.-Canada relations in recent memory. It's a feud that has become intensely personal, with Trump revoking an invitation for Canada to join a board of peace and mockingly referring to the Prime Minister's predecessor as Governor Carney. The timing of Canada's pivot couldn't have been more provocative. The deal was struck just months before the scheduled joint review of the USMCA on July 1, 2026. This review isn't just a rubber stamp. It contains a sunset clause that was a key American demand. On that date, all three countries must agree to extend the pact, or a countdown to its termination begins. President Trump has already signaled he sees the review as a moment of maximum leverage. U.S. officials have made it clear they intend to use it to force Canada and Mexico into a harder line against Beijing. The USMCA even has a poison pill in Article 3210, which allows a member to back out if another signs a free trade deal with a non-market economy like China. While Canadian officials insist this isn't a free trade deal, that's a distinction without a difference in Washington. By striking its own side deal now, Canada is seen as undercutting the entire North American bloc. This goes far beyond economics. For years, the U.S. has led a global effort to contain China's technological and economic expansion, viewing it as the #1 geopolitical challenge. This strategy depends on a united front from key allies like Canada, which is a member of the G7, NATO, and the Five Eyes intelligence network. Canada's deal with China is seen as a major crack in that front. It's seen as prioritizing short-term economic gain over the long-term security of the Western alliance. It's a massive propaganda win for Beijing, which can now argue that America's closest allies are hedging their bets. This friction was amplified by a war of words between President Trump and former PM Mark Carney at Davos, deepening the personal animosity between the administrations. On the surface, Canada's move looks like an act of economic self-sabotage, provoking its most powerful ally for a deal with a geopolitical rival. But is it possible this isn't a blunder, but a calculated high-stakes gamble? To understand what might really be going on, we have to look past the fiery rhetoric and see the world from Ottawa's point of view. For decades, Canadian foreign policy was simple: align with the United States. But in the volatile world of 2026, that's no longer a safe bet. The upcoming USMCA review is an existential threat. The Sunset Clause gives Washington a recurring weapon to hold over Canada's head, creating uncertainty that harms long-term investment. From Ottawa's perspective, going into that negotiation completely dependent on the U.S. would be a disaster. In this light, the China deal looks less like a betrayal and more like a strategic play for leverage. By showing it has other options, Canada is sending a message: our cooperation can't be taken for granted. It's a classic negotiation tactic. By cultivating an alternative, no matter how risky, you strengthen your own bargaining position. The tangible benefits of the China deal, especially for farmers who have been suffering under Chinese tariffs for years, make the idea of walking away from a bad USMCA deal more credible. This idea of diversification isn't new. It's a long-held Canadian ambition to be less reliant on the U.S. Prime Minister Trudeau's government seems to be pursuing this with new energy, seeking trade pacts not just with China but with India and other blocs. It's the strategy of a middle power trying to become more agile, building different coalitions for different issues instead of being tied to a single, unpredictable superpower. Some analysts call it a new age of strategic realism for Canada. The government is also responding to serious pressure at home. The chance to get canola tariffs slashed from nearly 85% to 15% was likely impossible to pass up. For farmers in the prairie provinces, this deal is a huge, tangible win. Likewise, with Canadians facing an affordability crisis, the promise of cheaper electric vehicles is politically popular. The government is balancing the geopolitical firestorm from Washington against these concrete wins for Canadian citizens. This reveals the paradox of Canada's strategy. It isn't a simple pivot away from the U.S. towards China. It's a complex two-track approach. At the same time, it's making deals with Beijing, Trudeau's government has also made concessions to Washington, like axing a digital services tax that angered the US and committing to higher NATO defense spending. It looks like a government trying to have its cake and eat it too. Use the economic opening to China as leverage for a better USMCA deal, while using security cooperation with the US as a shield against the political fallout. It's an incredibly sophisticated and risky strategy. The question is whether Canada can keep its balance on this tightrope. We are at a historic crossroads. The preliminary deal signed in Beijing has ignited a political firestorm, culminating in a threat from the US president that could shatter the North American economy. We've seen how this deal, which cuts tariffs on Chinese EVs and Canadian farm products, was seen in Washington as a profound betrayal. It's viewed as a move that undermines the Western alliance against China and weakens the USMCA right before its critical review. The war of words between the leaders has pushed the two nations to a breaking point. But we've also seen the complex strategy that may be driving Canada's actions. This is likely not a naive embrace of China, but a high-stakes gamble born of a desire for strategic independence. It's an attempt to gain leverage before a perilous negotiation where Canada would otherwise be at the mercy of Washington's demands. It is Canada trying to walk a geopolitical tightrope, balancing its economic needs against its security alliances, carving out a space for itself between two feuding giants. The question that hangs in the air is whether this gamble will pay off. Has Prime Minister Trudeau secured Canada's economic future with a bold stroke of realism? Or has he fatally miscalculated, provoking a trade war that will harm everyone? The furious reaction from Washington suggests the latter. The threat of 100% tariffs is on the table. The anger is real. And the trust that has bound these two nations for over a century has been deeply fractured. The coming months leading up to the July USMCA review will be decisive. We are about to find out if this alliance can be saved, or if Canada's deal has marked the beginning of the end for one of the world's most successful partnerships.